Alrighty, guys. I hope you all had a wonderful weekend. Let's go ahead and get started with our weekly Outlook webinar. Thank you guys for joining me today. Depending on where you are, it is either December the 17th, Sunday, or Monday, December the 18th. If you guys are hopping on for your very first time, thank you guys for joining us. My name is David Schinkel. I'm the CEO and founder of Positive Traders. I run this free weekly Outlook webinar just about every single Sunday for you guys to give you guys my outlook, my bias for the week, look at a couple different pairs that I am most interested in trading, and break down some technical analysis as well as look at the economic calendar. Now, as my disclaimer per usual is, this is just for educational purposes, guys. By no means is this any type of financial advice. Please take any advice that I'm going to give you guys or any outlook or analysis that I give as my own analysis and my own bias. Please do not be entering any trades solely off of my bias and my analysis. You should be using your own judgment, your own risk, your own analysis and bias before entering your own trades in the markets, guys, and never invest what you aren't willing to lose. So let's go ahead and jump right into things. As far as announcements go, the only thing I do want to announce is if you guys follow me on Facebook, you will see that this Wednesday at 9 p.m. Eastern time, I am going to be holding a Facebook Live. If you are new to Forex and maybe these charts confuse you, maybe you're new to Forex, you don't really understand it, you're just hopping on to kind of get some exposure about who I am, what Positive Traders is today. On Wednesday at 9 p.m., I am going to be going live on my Facebook, and I'm going to be breaking down the basics of Forex, and I'm going to be breaking down the exact strategy that I have used over the years to become successful and build my wealth in the Forex markets. The same strategy can be applied by yourself. I'm going to be breaking it down very simply. Going to be putting together a little PowerPoint. It's going to be very, very simple, straight to the point, and very straightforward. I would recommend having a notebook. So if you guys do not follow me on Facebook, you can just go on Facebook, search David Schinkel, or it's facebook.com/David N. Schinkel, just my full name with my middle initial N in there. And again, that is going to be Wednesday at 9 p.m. Eastern, going live on Facebook. There's going to be a lot of valuable content dropped on Wednesday for you guys. So that's basically the only announcement I have. We had a very profitable week in the premium group last week, closed the week off with just a little bit over 3% gain on a USD CAD short that we will be looking at. But without further ado, let's jump into the markets. Let's look at the economic calendar first. This week, not a lot in the markets, right? Last week, we saw a ton of news. Just very quickly to just retract to last week's economic calendar. Don't want to spend too much time on this, but the couple things to point out is we did see the Federal Reserve raise interest rates by 0.25%. So now interest rates are between 1.5% and 1.25%. Previously, they were at 1.25%, between 1.25% and 1%. So the Federal Reserve did raise interest rates as well as release their statement of economic projections, which you can actually go and read. If you go to the website, you can click right here. If you guys don't know what this calendar is, this is the economic calendar. It shows you all of the macroeconomics that are being released throughout the week. And you can just, if you want to read the FOMC statement that was released, you can just click right here, click on source. It'll bring you to the Federal Reserve's website, and through there you can actually find the FOMC statement that they released. I'll actually just show you guys very quickly. Let's open this in a new tab. Some of you guys may or may not be interested in this, but I do want to just show you this so you have it. You need to click on, I believe, monetary policy, meeting calendar, and information. Yeah, right here. And we're going to go to December 12th to December 13th. You can see their statements. You can actually click on the PDF and you can read through the entire press release statement that they released. So lots of good fundamental information inside of here. You guys do know, or you may not know, if you don't, you are about to find out that I mostly focus on what happens to the US dollar. We all know that the Forex market is a over 5 trillion a day market. And out of that 5 trillion, out of all the money that revolves around the foreign exchange markets, all the currencies in the world, the United States dollar makes up about 60%, a little bit more than 60% of this market. So understanding what happens to the US dollar is pretty fundamental to understanding the correlations between the rest of the market. So if you can understand what is going on with the US dollar, chances are you can have a pretty good idea what is going on with the whole of a market. You guys will also notice when we shoot over to the technical analysis in just a moment, you will notice that my main focus is USD pairs. Almost every single pair I trade has the US dollar in it. So just a little tidbit of information for you guys. But that was the main thing last week. We also saw interest rates stay the same for the pound as well, and a lot of news last week. But going right into this week, not a whole lot, right? Not as crazy as last week. There is going to definitely be some high volatility impact news. Tomorrow, we do have the Australian dollar monetary policy meeting minutes. That is where they're going to basically release the minutes. If you guys don't know what the minutes are, it's basically like a transcript of their meeting. So there's going to be the meeting minutes released for the Australian dollar tomorrow. A couple of notable speakers this week. We do have Governor Carney from the Great Britain pound speaking as well, or Great Britain speaking. Thursday, this is also, again, guys, this time that you see on this calendar, I would highly recommend that you guys go to Forex Factory. In the top right-hand corner over here, you'll see the time. You can actually click on that and change it to your time zone. So this is going to be, this time that you guys see right now is plus 10 GMT, so it's Australian Eastern Standard Time. So this time may not be the same time as you. It may actually be a completely different day for some of you guys. So this happening on Thursday for me, maybe Wednesday for you. So make sure that you guys go and look at these specific times, but do know that later in the week we do have some quarter-over-quarter GDP for New Zealand dollar. We have the Bank of Japan policy rate. So this week, just last week, how we saw the Federal Reserve make an interest rate decision for the dollar, and we saw Great Britain decide an interest rate for their currency, the Great Britain pound. We're also going to see the Bank of Japan have a interest rate decision for the Japanese yen. A couple other news this week. We have some pound current accounts. We have the final GDP towards the end of the week, but overall a pretty normal week, right? Nothing that stands out too much. I really wouldn't even say that there's any one specific thing that is our key risk event. You know, last week our main key risk event was the Federal Reserve raising interest rates, but this week it's a pretty mixed bag, right? I'd say they all weigh pretty evenly on the scale. Maybe the Bank of Japan, we only have one interest rate decision this week. We all know that interest rate decisions are probably a little bit more volatile than most high impact news. So that's probably going to be the key risk event for this week. We haven't been too interested in trading yen pairs recently, but that could change all based on price action. So very important that if you guys just get one thing out of me going over the economic calendar, that you should just be at least aware of what is going on in the market. Every single time before I enter a trade, I go ahead and I look, like let's say I'm about to enter a trade right now. Well, I'm going to go and look let's say I'm going to trade Euro USD. So what I'm going to do is I'm going to look on here and I'm going to say, is there any high impact news coming out for the Euro or the US dollar? And it all depends on the time frame of the trade, right? If it's going to be let's say have a 15 pip stop loss, then we're probably only going to be in that trade for maybe a couple hours, 4, 5, 6 hours at the max. Let's say if we take a trade with a 30, 40 pip stop loss, then that might be based on a higher time frame. So we might be looking at economic events that are coming out in the next 12 to 24 hours. You have to do your analysis all relative to the time frame and the type of trade that you're taking. So just very important that you reference to the economic calendar. I literally keep this tab open in my browser all week long. I don't close it until Friday afternoon. I reopen it right before the markets open to take a look at the upcoming week. But I literally just have this open the entire week, guys. It's just sitting there, and I always look at it, so I don't forget. It's kind of hard to forget after you create a habit out of it. But other than that, let's move on to the technical analysis. Again, not a whole lot to focus on the economic calendar this week, but do be aware of the events going on. So let's go ahead and break down the charts. One thing I would like to mention is last week's weekly outlook. If you did not get a chance to watch last week's weekly outlook, I would highly recommend take the time, go over to our YouTube channel and watch the replay when you get a chance. Last week's breakdown of the dollar index, I did a full breakdown. I discussed these orange channels. I discussed all these different levels. I discussed all these green different levels you guys see on the markets. I discussed this in last Sunday's weekly outlook webinar. I did a very detailed breakdown analysis. Got a lot of feedback. I think that's actually our most liked. We almost broke 100 likes on the YouTube video, and I think that was one of our most viewed videos, almost 1.7K views. So I appreciate you guys' support last week on that video. But moving into this week, so I'm just saying that because I'm not going to spend too much time breaking down all of these different levels because I haven't changed any from last week, and no sense in repeating something that is recorded for you guys to watch. And it's actually, there are timestamps now, so shout out to Kevin in our premium group. I'm not sure if we're going to be able to get it done today as well, but I do know on last week's webinar we did get the timestamps for breaking down each of these pairs. So if you guys need to reference back to this, you can just click on the timestamp in the YouTube description, and it takes you right to that pair. But let me give you my bias for the week. To start off and going into the week, let me be very clear that my bias for this week is I am expecting some dollar strength as long as this current resistance area is broken. So we talked about this area last week. Let's just very quickly recap last week. Beginning of last week started right here on the dollar index, and we talked about this zone, okay? Let me actually circle it in red for you guys so you guys can see exactly what I'm talking about. Right at this trend line where we got a bounce off of last week. The reason why this level was so significant is resistance, 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 resistance. All right, so from a horizontal level of resistance, we were meeting that area last week. Also, psychological level, that's the 94, that's an even number, so that's also a psychological level of resistance. And support, resistance, resistance, support, support, support. Very clean ascending trend line cutting through price, creating multiple levels of support and resistance on the daily time frame. This is the premise of my technical analysis strategy, guys. I do not complicate the markets. I keep it very simple. I use basic support and resistance, Fibonacci, a couple moving averages here and there on these higher time frames, and I let price action give me the confirmation to take my trades. Trading does not have to be super complex, guys. It is more based on patience, risk management, and risk to reward on the trades that you take, rather than having some complicated strategy, technical analysis strategy. Now, do not get me wrong, guys. There are many traders that I know that I look up to that do have, a little bit more technical outlook. Sometimes we will look at counting waves. Sometimes we will look at ABCD patterns. I'm not really big into harmonics as much, but definitely, counting waves, Elliott waves, three-wave patterns, ABCD patterns. Sometimes we will talk about that, but overall, my main strategy in the market is just based on traditional support and resistance, supply and demand levels, just trend lines, and just looking for confirmation, waiting for giving a good price action confirmation. And that is, I'll delve a little bit deeper into that on the Wednesday Facebook Live that I'll be doing at 9 p.m. Eastern, breaking down my strategy, sharing it with you guys. So make sure you guys are on that if you want to understand the basics. It's going to be a very easy, breakthrough PowerPoint, very easy slideshow of showing you guys my strategy. So make sure you guys are on that if these markets are looking a little confusing to you guys. But going over into this week, we talked about Last week, there was one of two scenarios at this area. It was either going to break through this area, find a bounce, and move higher, or we were going to respect this resistance and probably come back down to the 93.2 level before deciding where price wants to go. And we did see this scenario happen. So we saw a little bit of weakening of the dollar, which I don't think a lot of people were expecting. I know a lot of people were just wanting to buy the dollar last week just because of the Federal Reserve raising interest rates. That's another thing is last week I also did go over what it means to raise interest rates, what it means to lower interest rates. But generally speaking, long term, it is usually good if they raise interest rates for an economy, and usually bad long term if they cut interest rates. So we saw the interest rates rise in the US for the Federal Reserve. So long term, that should appreciate the dollar index, but very, very common scenario that we saw happen last week, which is buy the rumor, sell the news. So we saw a lot of the market pricing in and buying the dollar based on the rumor, okay, quote unquote rumor of the Federal Reserve raising the interest rates. And then once the news actually came out, we saw a sell-off, which is this big bearish daily candle of the dollar. So not unexpected. We were out of the markets, and I told you guys, definitely be very careful of the interest rate decision. It doesn't always mean, bang on money. So what's up, Sheldon? Good to see you in here. So let's go ahead and talk about this week for the dollar index. Pretty much very similar scenario of last week, guys. We are right back out. It's almost at exactly the same price that we started at last week, okay? So this candle is actually the start of last week. So very similar starting point from last week. We did see a pretty decent gap in the markets, a little bit of appreciation of the dollar over the weekend. But one of two scenarios is going to happen this week. Either we are going to continue to respect this resistance and probably head back down to the 93.2 level if that is the case, or we are going to see a strong push above this zone, back above this trend line, and then bounce off of here and move up higher. I'm going to be more biased towards dollar strength this week than dollar weakness. However, please make sure that you guys understand when I say that that is just a bias. That is not a guarantee. It does not mean that hop off this webinar and just go look at opportunities in the markets to buy the dollar all across the board. We need confirmation. That is the key word, guys. Confirmation. And confirmation is only going to happen if we see price come up above this area, above this resistance, and close. The confirmation is a close, a daily candle close above this area. If we do not see a daily candle close above this area, that is not confirmation. A good example is this daily candle from last week. Do you guys notice how this daily candle rose, right? We can see the wick all the way up here. So the candle actually rose above this resistance area, but closed back below the resistance. That is not confirmation to buy the dollar. That is actually confirmation that resistance is holding. So we need confirmation, which is going to come in the form of a close above this level. But if we close above the 94-point level this week, expect a rally in the dollar. This is a very significant level for the dollar index. And just to the opposite side, if we see a bounce, if we see a close below here, then we're probably going to move a little bit lower into this week and play around this area. But these are my two levels right now, guys. My support on the dollar index is at 93.2. My resistance is at 94. So as long as price stays above 94, I'll be bullish. If price breaks below 93, I will be bearish. Those are my two levels where, if price goes in one direction, we are going to change our bias to that direction. But as long as we're in this range, not super interested in trading the dollar, guys. Omar, can we consider that resistance is on the 61.8% fib going down? Yes, that's another thing also is you will notice that's one thing I talked about last week. You'll also notice that you guys can maybe see some of these horizontal dotted purple lines. This is also the 61.8% retracement level of our yearly high and our yearly low. So if I scale out a little bit, you'll be able to see our high from this year all the way to the left over here, and our low all the way to the right in September. And this is the 61.8% retracement level. So another, just adding to the confluence. It's not just the resistance right here, resistance right here, resistance right here, resistance right here. It is also happens to be, and resistance right here also happens to be the 61.8% retracement level. So the 94 level is a very confluent level for the dollar index to be watching. And just very quickly, going to take just 15 seconds to explain this. If you guys don't know what we're looking at, this is the dollar index. This measures the strength of the dollar weighted against 6 other currencies. So basically, if this is going up, that's good for the dollar. If it's going down, that's bad for the dollar. It does the complete opposite of the dollar, of the Euro USD, of the pair Euro USD. So if we are looking, for a buy on the dollar index, we're looking for a sell on Euro USD. Vice versa too. If we're looking for a sell on the dollar index, we're looking for a buy on Euro USD. This is the I think if someone can correct me if I am wrong, but I believe that this is the strongest correlation in the Forex markets is the dollar index against the Euro USD. They are literally an inverted mirrored image of each other. What time is daily close here in Australia? Paul, I believe the daily candles close at 8 p.m. Australian Eastern Standard Time, which is going to be, if you're on the other side, if you're on the west side of Australia, it is going to be it's going to be 1 hour earlier, so 7 a.m. I believe. I'm still a little bit lost. I just know where I am right now out here on the Gold Coast in Queensland, Australia. So, yeah, it's going to be 8 a.m. 8 a.m. Paul is when the daily candle closes and reopens on our end. Let's go ahead. So you guys have my bias on the dollar index. So let's go ahead and look at gold. So gold moved pretty accordingly to our plans last week. We did not trade gold. We haven't traded gold in quite some months right now, but it has been following our analysis up in this area. We were expecting a breakout to the downside. Our target, long-term target was, or a medium long-term target was around the 1250 level, which was touched. So pretty spot on analysis with this. I'm still looking at further downside in gold. It may not drop straight like that, guys, but my overall bias is towards the dollar strengthening. I still think long-term the dollar is going to strengthen, so that should give us some long-term weakness in gold. I did tell you guys last week when price was all the way down here to look for sells on gold, but not before a pullback. We had a pretty big decline in gold, and so a pullback was pretty expected. I do like the way the daily candle closed on gold. Pretty nice bearish exhaustion candle. So we'll see what happens with gold this week. We are back above the 1250 level, so not super keen on taking a short on gold until we break back below this level. But if we can break below the 1250 level, maybe accumulate some orders, create a bear flag, maybe looking for some downside on gold. So that's going to be my bias for gold. Looking at Euro USD. Euro USD is looking pretty bearish. I'm really liking the way Euro USD is looking because I have been looking to get into a sell for a while, but obviously last week was a little bit difficult to be looking for trades just across the entire markets just because of the interest rate decision from the Federal Reserve. So I think this week is going to give us some good trading opportunities because there is not a lot of economic news that we need to watch out for. It should be a pretty smooth trading week. But then again, we are in December. You guys should know that December is notoriously known for being the worst month of trading. Out of all 12 months of the year, most bank managers, most hedge fund managers, institutional traders don't even trade on during the month of December because liquidity dries up. People are taking vacations. It's the holidays. Not always the best time to be trading, but we're still looking for opportunities. We still had a really bang on week last week, had made some really nice profits on all of the managed accounts and people that were following our signals in the premium group. So it's a really good week last week, but going into this week, I think there could be some more opportunities. But very similarly, you guys will notice how I was just talking about how the dollar index and Euro USD have a very strong negative correlation to each other, if not the strongest negative correlation in the markets or consistent negative correlation in the markets. We can see that similarly to how the 94 level of resistance on the dollar index is the 117.18 level of support on Euro USD, and how the 93.2 level on the dollar index of support is the 118.88 level of resistance on Euro USD. Very flipped image of each other. And overall, I would like to be looking for sells on Euro USD. But But here's the but, guys. Okay, so don't just be selling Euro USD because I said I'm looking for sells and I've been doing this for a long time and I'm a professional trader. We need, again, just like the dollar index, we need confirmation. That confirmation is going to come in the form of a close below this support. As long as we are in this range between the 118.88 and between the 117.18 level, I am not super interested in taking a trade on Euro USD. I need to see price action close below this level, ideally even below this trend line, which we can see resistance, resistance, resistance zone, resistance, support. Also, you guys can see this descending channel. It's also the resistance from this descending channel. Sorry, guys. We had somebody drawn on the screen. Need to disable that. Sorry, guys. Ignore those two yellow marks. But we are looking for a sell on Euro USD as long as it breaks the 117.18 level. But just like the dollar index, I see two scenarios this week. We could either break below this support and then continue falling lower, which I think is more likely to happen over the coming weeks. We may, guys, remember, the markets are not always going to be, some crazy movement in the markets. Take this area, for example, or this area, for example, or this area, for example, or this area. Sometimes we're going to see a week of consolidation. We aren't always going to see this happen or this happen or this happen or this happen in a week. It's not always going to be strong pushes. So when I say this could happen in 1 week, could happen in 2 weeks, might take 3 weeks or even a month for this downside to happen. I think overall my long-term bias is still going to remain to the downside on Euro USD. Or we're going to see price bounce off of this area and probably head back up towards last week's highs. But again, we are reactive and we react and are adaptive to what happens in the markets. It all is based off of patience and confirmation depending on what price wants to do. So that's my analysis for Euro USD. USD Swiss franc. Last week, we marked off this resistance trend line on USD Swiss franc. We actually saw, and this was actually the opening of last week, saw some pretty nice decline. Obviously, come Wednesday of last week, when we saw the Federal Reserve raise interest rates, we saw a pretty big decline in this pair just based on the dollar weakness. So all of this is expected. It all makes sense in the markets. And of course, just as we saw last week, we saw the dollar index kind of make a little bit of a pullback, kind of want to strengthen a little bit. We also saw USD Swiss franc strengthen a little bit. And so my eyes right now, guys, are on this resistance trend line. If we can get above this resistance trend line, I would be expecting some pretty big upside on this pair, along with dollar strength and a sell on Euro USD. If you guys don't know the correlation, definitely write this down. Euro USD and USD Swiss franc have a negative correlation, okay? Because the dollar index and USD Swiss franc have a pretty positive correlation. You'll notice, obviously, the charts look way different because we have the Swiss franc, which does not make up any part of the dollar index. I don't believe there's only 6 currencies that make up or that weigh against the dollar index or make up the weight of the dollar index. And I don't think the Swiss franc is one of them. Or if it is, it makes up a very, very small percentage. The euro makes up over 60% of the weight of the dollar index. So that makes sense why Euro USD has such a strong negative correlation to the dollar index, and USD Swiss franc only has a little bit of a positive correlation to the dollar index. And if I'm talking too fast for you guys, you're completely lost. This is over the top. Just watch this, have some exposure, be a sponge, soak this in. And again, make sure you guys are on my Facebook Live on Wednesday at 9 p.m. where I'm going to be covering the basics for you guys, breaking down my exact strategy that I have used to find success and wealth in the markets that you guys, it's going to break it down exactly how you guys can follow that exact same strategy for yourself as well. So again, USD Swiss franc overall going to be bullish just based on our bias for the dollar index and the strengthening of the dollar. Looking at pound pairs, we're going to pretty much skip over the pound pairs this week, guys. I'm not super interested in trading pound pairs. The overall long-term trend on pound dollar is very bullish. We've seen that last Friday. We made a very, very big bearish engulfing candle to close the week. That could be hinting at we could see some weakness in the pound dollar to start off the week. It might make sense with dollar strength to see this pair move lower. But we're going to talk about pound yen in just a moment. My bias on pound yen is going to be more to the upside than the downside, which kind of causes some divergence for the pound dollar, because if we're looking at buying the pound, but we're also looking at buying the dollar at the same time, that's going to create some divergence and not the best trading conditions. So I'd prefer to be looking at, pairs that aren't creating as much divergence. So let's go ahead and look at pound. So I'm going to be on the sidelines of pound dollar, guys, with pound yen. Pound yen had a pretty nice decline last week. Again, if you guys have been watching for the past couple weeks, we haven't really been interested in trading pound pairs. Pound has been, there's been quite a bit of Brexit news that have come up recently that has caused some volatility in the pound. We've just seen the pound pairs go pretty wild the past couple of weeks. Pound yen has been moving quite a bit. And, pound yen doesn't always give us the best risk to reward ratio on trades that we place because it is so volatile. You generally have to have a little bit bigger stop loss than you might have to on other pairs. So you guys know that, one of my main things, and again, I'm going to be talking about this on Wednesday on my Facebook Live, is the risk reward aside from the risk management, but mostly, aside from risk management, risk reward plays a big role in my strategy. To have good risk to reward, you don't generally want to have, 100 pip stop loss, 200 pip stop loss, unless of course you're going for a 200 pip, 400 pip target, something like that. But most of the time, we're looking for a, 50 pip target, 60 pip target, something along the lines of that. So pound yen could really go either way this week, but, I'd be probably with the dollar strengthening, really, I only see pound yen really shooting up and going, very high if the dollar index has a strong push to the upside. If we see a very strong push to the upside on the dollar index, we're probably going to see a strong push to the upside on the pound yen as well. But let's just stay on the sidelines with pound pairs right now. Let me see what we've got in the chat. Make it on Wednesday, see the replay. Omar, chances are there will be a replay. It's not going to be uploaded to YouTube or anything like that. It's just going to be like a replay on my timeline on Facebook. But there probably will be a replay. Sheldon, EJ, I don't actually trade Euro Jappy. I might be able to take a quick look at it for a second at the end here. In Asia, they do. It's true that GJ and UJ move similarly. That is true. They tend to have a positive correlation because of the yen playing such a big role on these pairs, but they still have some very, very different looking charts. All right, dollar yen. Dollar yen is actually not looking too bad to trade. You guys know my overall bias has pretty much been on the sidelines for dollar yen. We've seen the yearly high to the yearly low. We've had that fibbed out to see all of our retracement levels. We met the 61.8% retracement a couple months ago in late September, early November. Bounced off of that 61.8% retracement level, came back down, and we are inching our way back up to the 61.8% retracement level. And I'm most interested in trading this pair if we can get back above this zone, maybe find a bounce and then move up higher. But I do like the way we have, if you guys notice the formation that we have formed here. It's not textbook by any means, but it does look like a tweezer's bottoms. And we got a little bit of a bullish engulfing candle from Friday. So this does give us a little bit of, and of course, our overall bias is towards strengthening in the dollar, or that's what I'd like to see as long as the 94 level gets broken. So that could create some bias to looking at buying dollar yen. So if we can get a good risk to reward on this trade this week, we can find, some good price action, then we might get some good opportunities to buy dollar yen, maybe on the 4 hour, if we see a break of maybe this zone, maybe a little bit of a bounce in this area, and then maybe come up to retest last week's highs. That could be a possible scenario for, or is that last week's highs? Let's take a look very quickly. 13, yes, that is, oh, actually 18, yes, that is last week's highs. Yep. Okay, so yeah, last week's highs. May test that. So it could be a possible scenario to be looking for dollar yen. So I would be more bullish or more biased to the upside than the downside. All right, AUD-USD. I think AUD-USD is actually one of the pairs that if you guys are in the premium group, probably expect looking to have a trade call on this pair this week. I think some good downside is possible. We did see a pretty big rally, nice little stop hunt from the institutions to run stops of people that were trading this channel. And this is another good reason, guys, why it's good to have confirmation, right? I know a lot of people, when we've been playing in this channel, this descending channel since September, and it's respected price action pretty well. So I know a lot of people, not our group though, because we look for confirmation, but I know a lot of people just in general, we're probably looking at selling AUD USD around this area or even around this area. From this major level of previous support and resistance. But of course, if you actually look at the way the daily candles closed, there's no confirmation whatsoever to be selling AUD USD. If anything, it looks like a buy based on how strong these bullish candles look. So again, it just goes back to patience. My strategy goes back to patience and waiting for confirmation on our trades. But this week, if we see some downside pressure, some selling pressure, I would like to look for sells on this pair. We know that the price action is pretty clean on this pair. And overall, if we are seeing the dollar strength, like I'm hoping to see, as long as we break that resistance level on the dollar index, we should see some pretty significant downside this week on AUD USD. We are also still below this major resistance level, which is previous support level. This not yearly low, but it is just the previous swing low to swing high. And give me just 30 seconds, guys. Let me please grab my computer charger. I don't want this computer to die in the middle of this. So give me like just 10 seconds, guys. Just a second. Alrighty, guys, and we are back. All right, sorry about that, guys. I thought that my computer charge would last a little bit longer than that. It just was shooting down. I think my brightness was all the way up. That's probably why. But anyways, let's go ahead and jump right back into it. AUD USD overall bias is I would be looking for sells this week. Let's break it down onto the 4 hour. I'll give you guys an example of something that I would be looking for. If we can get, I really like trading bear flags, guys. That is probably, or just flags in general, bear flags and bull flags. I really like trading breakouts. Generally, they are very clean. They have a pretty high, as long as you get a good risk to reward, it has a pretty high success rate long term, as long as you get a good risk to reward on the trades. But I really like how we're kind of finding a little bit of support in this area. So what I would be looking for is if we can actually create a bear flag in this area, we can get a little bit of accumulation of orders on the 4 hour right above the support level. Maybe look to put a sell stop just below the support, stop loss right above the resistance, and then of course, looking for a pretty good risk to reward. Maybe have our target somewhere around here from the top side of that previous trend line, or just to look for maybe a level in between to see if there's any confluence. We can also maybe go ahead and fib out this small swing that we've had. And we can actually see the 50% retracement level is right around that area. So that kind of gives us some confluence. So something like that, but again, this is all conditional based on price action, but just an example of something that, I would take. If I see that happen, I would definitely be taking that trade. Even if that consolidation happens underneath the zone, we see price drop a little bit and we see orders consolidate, and then look for a sell at that area. Again, same thing. Put a stop loss just below the support of that consolidation. I'm sorry, a sell stop just below, a pending order. You guys know, especially if you're in the premium group, you definitely know that like 95% of all the trades that we place are usually pending orders. I very rarely give out an instant execution order. So that way we have, predefined. We already know where we're looking to enter. We already know where our stop loss is going to be. We already know, regardless, even if it's in instant execution, we know exactly where our stop loss is going to be, exactly where our take profit is going to be before we ever enter a trade. So let's go ahead and look at that. Dwayne said, watch USD NOK has a lot of movement. Yeah, I don't really like trading exotic pairs. But yeah, let's go ahead and look at New Zealand dollar, US dollar. NZD USD, not as interested. We know that usually AUD USD and NZD USD have a pretty strong positive correlation. Last week, we saw a pretty decent rally. I mean, we saw a pretty decent rally on both AUD USD and NZD USD, but NZD USD is above some pretty significant levels. One significant level I do want you guys to definitely be watching is this weekly level of support that we bounced off of. So right around this area, it's not a perfect zone, but this zone is also previous support, resistance zone, resistance, and resistance. It is a multi-year 50% retracement level. So we have from 2015 lows to 2017 highs. This entire move right here fibbed out. We see the 50% retracement level acting as a pretty significant level of support. Also just happens to be confluence of just, zones in the past, which just matches up and gives us confluence. Now, I'm really not too keen on trading New Zealand dollar, US dollar. A good reason is because of this weekly candle. Look how bullish that weekly candle is. Just really strong presence of buyers in the markets last week. Really not super interested in trading New Zealand dollar, US dollar right now. So we'll just stay on the sidelines. And USD CAD. USD CAD looks like some good opportunity to the upside this week. I really like how we'll talk about what this is in a second, guys. But on the weekly, if you're just looking at the way this weekly candle from last week closed, also we have this really, really nice bull flag. I really do like how there's a very, very strong push from the sellers at the beginning of this week. At one point last week, this is a big red candle, looked very bearish for USD CAD, but before the end of the week closed, we obviously saw the buyers come back in and press price higher. So I think this week, honestly, if you guys, again, if you're in the premium group, we just talked about how AUD USD looks like one of the better setups this week. Euro USD looks like one of the better setups this week. And USD CAD looks like one of the better setups this week. All biased overall towards dollar strength as long as we can get, again, on the dollar index, that resistance to break. But those three pairs are probably most likely to get trade signals called on this week in the premium group. But so I'd be looking for something like this happening, a bounce above this resistance and then moving up higher over the coming weeks. But I do want to go over a trade that we took on USD CAD. This is actually for last week being a very volatile week. We took one trade on this pair. And one thing, guys, I'm going to go over it probably in just a moment. But yeah, I will go over it very quickly at the end here to show you guys how you can be successful taking even as little as 10 trades per month, even 7 trades per month. You could still be successful long-term in the markets. But we took one trade last week because of the interest rate decisions. If you guys are in Positive Traders or you are interested in being a part of Positive Traders, being part of our membership group, please understand that we are not like every other group out there, guys. There's a reason we have been around and we have consistency. I actually have a verified track record, a verified MyFX book showing good gains, showing actual, real, consistent is the key, consistent long-term returns on our clients' managed accounts, is because I don't overtrade, but I'm also a quality over quantity trader. You do not need to take 50 trades a week to be profitable. Let me just ask you this. Would you rather still end the month at the same results taking 100 trades in a month or taking 10 trades in a month? You're going to have a lot less emotional stress. You can go through a lot less of an emotional roller coaster if you're taking fewer trades. Okay? So understand that going into the premium group, if you guys are interested in it, it's not like we're giving out 10 signals every single day, 50 signals every single week. There are going to be weeks here and there. We're going to get upwards of maybe 10 signals in a week. But on average, we're taking between 1 to 5 trades per week. Generally, I'd say probably an average of 3 trades per week is probably fair to say long-term in Positive Traders. But it's not going to be every single week where there's 10, 15, 20 trades. It all is based on the market conditions. And as we touched base on before, you guys should all know that December is notoriously known for being a bad month for trading. So, or a slow month at least, so the least attractive month to be trading. So I just want to look very quickly, just show you guys a trade that we took. Our take profit was hit very, very quickly. We closed a little bit over 3%. Gain on the managed accounts and across the board, but we actually entered the USD CAD trade right here. So I should actually probably move over this just a little bit. So we actually entered right about there. So at the close of that was actually even one over. It was right there is where we entered the trade. So we entered the trade right there. Pretty simple price action. We saw a nice little bit of accumulation of orders, a little bit of a descending trend, nice little bearish engulfing candle on the 1 hour. So we took just a very, very small trade, literally zero drawdown, had absolutely no drawdown, smash, take profit, won within, obviously we can see within 3 hours of taking the trade, closed, boom, out of the trade. And we saw a pretty big rally on USD CAD. So this was a very nice and successful trade last week. So I just wanted to give you guys an example of, and you guys can see we had a 1 to 2 risk reward. We risked 18 pips to make 36 pips. So pretty spot on, and our MyFX book reflects that gains from last week. I actually went to sleep after that trade, but there was an opportunity to potentially get in a buy on USD CAD right after that sell, just based on the way that 4 hour candle looks. That's some really nice price action, especially because we were already biased towards upside on the dollar, upside on this pair. But I saw some opportunity to the downside. We have to adapt, be adaptable to the market. So we took that opportunity. But going into this week, just to quickly run it on the daily, we haven't looked at it on the daily yet. Same thing how it looked on the weekly. We had a nice big push past couple months on USD CAD. A little bit of consolidation recently, nice bull flag. So I would expect that if and when this bull flag resistance breaks, probably going to see some pretty significant upside on USD CAD. I also just really like the way the last few daily candles on USD CAD closed. So, I think that this is definitely hinting at some upside this week. But again, very similarly to all the other pairs that we're waiting for confirmation with, same thing with this. Our confirmation in USD CAD is going to come in the form of a close above this resistance. So until that resistance breaks, not super interested in taking a trade on this pair. Sheldon said looking to buy this week. Same here, brother. Same here. So great minds think alike. Big shout out to Sheldon too, always helping out in the chat room. He is our admin in the Telegram chat room. So if you have any questions about really anything positive traders related, or just pretty much anything in general, very knowledgeable guy, great guy. He is our admin in our Telegram chat room, so feel free to hit him up. Also post some good trade ideas, helping out all the free members in the Telegram group. So I appreciate you, Sheldon. But that's it, guys. That is all I've got for today. Ran a little bit longer than I wanted to. So thank you guys for pretty much everybody sticking with me this entire webinar. Again, overall bias is looking for that resistance on the dollar index to break. Again, if you're in the premium group, look for some signals this week to be given on Euro USD, AUD USD, and USD CAD most likely. As of right now, that looks like the best price action in the markets. So that's it. If you guys are in the free group, I will catch you guys in 1 week from today for next week's weekly outlook. If you are a premium member, I will catch you guys on tomorrow's daily live webinar. If you guys are not familiar, for my premium members, I do a live webinar every single Monday, Tuesday, Wednesday, and Thursday. Obviously, if you're in Australia, it's every Tuesday, Wednesday, Thursday, and Friday. So you guys have the opportunity to join me live every single day if you are a member of Positive Traders to join me as we mark up trades. Sometimes we even take a trade live. If we're in a trade, we break down the exact trade. Gives you guys a really good insight into my head breakdown and really learn and understand the Forex markets. Sometimes we'll even go into a little bit of education. We've got our training videos as well for you guys in there if you're a premium member. So lots of value and content for our premium members, and of course our trade copier. So tons and tons of value. So if you guys want to learn more about our membership, head on over to our website. It's positivetraders.us. Other than that, guys, please share this recording. It's going to be uploaded to YouTube in the next 30 minutes or so. Please share this recording with your friends. Share it all over Facebook. If you have any other telegrams or anything like that you manage, please don't be spamming other people's telegrams. Please be respectful of other people's communities that they have spent the time building. But if you have your own groups, feel free to share it within your own groups. So other than that, guys, that is it. If you have any questions, comments, concerns, please feel free to reach out to me. Telegram, Facebook, Instagram, any way, Slack, any way you can get a hold of me. I will find a way to reply to you guys. But I appreciate you guys' time. Thank you guys. Have a wonderful week. Remember to practice that risk management. Make sure you guys have good risk rewards on your trades. And join me on Wednesday at 9 p.m. Eastern on my Facebook for a Facebook Live. Going to be breaking down my exact strategy in the markets, how I've been successful, the exact strategy that you can follow, going over the basics of Forex. And if you don't have me on Facebook, please join me on Facebook. And one thing I will do very quickly, guys, just to show you, just to give you guys an example, I'm going to just quickly show you guys Slack. I know a lot of people have been wondering, how do I give out signals? People are curious. So I just very quickly screen sharing Slack. This is, I just scrolled up from last week. You guys can see at the top, this is from Friday, December 15th at the top up here. This is an example of the USD CAD trade. Okay, so every single trade that I give out, I write out the pair, I write out the entry. This actually did happen to be that 5% time when I did an instant market execution. Most of the time it's going to be a pending order, but again, I just saw the opportunity. We had to seize the opportunity, so we took it. So this was an instant execution. Give you guys the exact stop loss, both of our take profits, and our analysis. And again, in our trades active, you see, so I'll post the trade active when it is active. But you know, it's very, very organized in here. At Take Profit 1, we are always either locking in profits or taking or setting our stop loss to break even to get a risk-free trade. In this case, we actually did go ahead, so we moved our stop loss to break even up 2%, and then we had a trailing stop loss hit. So, and you guys can see obviously some pretty good feedback. So people are liking the stuff that we have in the premium group. So very, very, and we always upload the recordings to the back office for you guys. So lots of organized education, lots of organized feedback for you guys in Slack. If you are a premium group, you receive access. You can see we actually also up here, we have about 297 members inside Slack right now. We have about a little bit over 100 unaccepted invites for people that are just interested in our managed account. So we actually have over 400, a little bit over 400 members in the premium group for positive traders. So you guys can see this is a real live community. We are very big. We are very real. So we might not be that active on Telegram as much, but trust me, we are very, very active in Slack. So and you have complete access to that once you are a member of Positive Traders. Omar said, guys, I'm in the premium and I can guarantee that you won't regret if you are serious about that. Awesome, Omar. Thank you very much for the feedback, guys. There's tons of premium members on here. There's tons of premium members on Telegram. There's tons of premium members on our Facebook group. Guys, if you have questions, you want to talk to somebody in the premium group, you just have to ask. Closed mouths don't get fed, right? I will connect you guys with somebody in the premium group. They can give you some feedback on it if you have any questions. But other than that, feel free to reach out to me. I'll catch you guys tomorrow if you're a premium member, next week if you're a free member, and if you're watching the recording, leave a thumbs up, subscribe, like, comment, all that good stuff, and I'll catch you guys later. Take care, guys.